Hi guys, good morning. You're watching Money Control and I'm here Nandita Khemka with opening bell. Of course, lots to watch out for over the next 30 to 40 minutes. It's a Friday morning. Thank God it's Friday and it's been a good one so far given the fact that we've seen a reversal in the rate cycle globally with the Fed doling out a jumbo 50 basis point rate cut, and of course we had a good reaction coming in yesterday with the Nifty hitting a fresh high and crossing that 25,600 mark in intraday trade, although we saw consolidation kick in after that. But Wall Street also notched a fresh record yesterday. So yes, there is all-round cheer, but today, will it be a day of consolidation, or are we going to see a dash at record levels once again? And mid and small cap end of the markets have seen some bit of pressure. So whether that will continue or not is something that we'll be watching out for. Lots of stocks to watch out for. And we also have, our technical experts and fundamental experts joining in on the show to help you navigate your stock-related queries and to understand what the texture of the market is looking like from here on. But of course, before we do all that, let's take a look at the top headlines at this hour. It was a thriller of a Thursday for Wall Street. The Dow and S&P 500 hit record highs. The Nasdaq as well surged over 2% as stocks continue to march ahead following the Fed's jumbo rate cut and strong unemployment data. Asian markets trade largely higher following a strong close on Wall Street. China leaves benchmark lending rates unchanged while the GIFT Nifty is implying a higher start for the Indian market. Remember, Bank of Japan's rate decision has also come out and they have held on to interest rates. Crude rises with the Brent hitting $74 a barrel following the Fed's rate cut and rising tensions in West Asia. Meanwhile, gold prices tick higher. And the stock in focus today will be IIFL Finance. RBI lifts curbs on the company's gold loan business after 6 months. The company can now resume sanctioning gold loans in compliance with rules and regulations. Well, let's take a look at the trade setup then. Of course, as I mentioned, we have strong cues coming out of global markets. Wall Street, Dow, S&P 500 notched record close. The S&P 500 crossed the 5,700 mark for the first time. The Dow also, crossed that 42,000 mark for the first time. Asian markets were also in fine fettle. Nikkei was rising, and you had the Bank of Japan interest rate decision also coming in, and China, of course, holding on to benchmark lending rates as well. But back home, we did clock that 25,600 mark in intraday trade, but we cooled off and we ended below that 25,500 mark as well. And the broader end of the markets were under pressure yesterday, but they were still off day's low because the mid-cap index recovered as much as 1,000 points from the day's low to end lower by about 0.5% or thereabouts. But the good news is that the Nifty Bank index has started firing up because it came very close to its all-time highs of 53,300 and thereabouts. And it ended above that level as well. So today I think all the focus will be on the Nifty Bank index, whether or not it can manage to surpass the previous lifetime high or not. Mid-cap index, of course, was down for the third straight session. HDFC Bank, Kotak Bank, these were some of the major contributors on the Nifty Bank index, but PSU stocks remain under pressure with the Nifty PSC index down nearly 2% or thereabouts. Talk about the option queues. Put call ratio jumped to 1.26 vis-a-vis 1.13 in the previous session. Stocks in the F&O ban list, you have new entrants, the likes of Chambal Fertilizer, Nalco as well as SAIL. Continuing to be in F&O ban is a long list of stocks: RT Industries, Biocon, Birlasoft, GNFC, Granules India, LIC Housing Finance, PNB, RBL Bank and Oracle Finance. And the stock that has come out of F&O ban is Balrampur Chini, and the stock did see some bit of short covering yesterday. So we'll see whether the up move continues in Balrampur Chini as well today, because it has of course come out of the F&O ban. Foreign inflows took a bit of a setback yesterday. We saw FIIs rather turning net sellers to the tune of 2,500 crore rupees in the cash market. But remember, they have turned buyers in the month of September and we have seen good inflows coming in. On the other hand, domestic investors continue with their buying support. 2,000 crore rupee worth of stocks were bought in the cash market. But let's understand what to watch out for in terms of levels both on the index and the Nifty Bank index, and where are we headed and how are we poised to shut shop for the week. Raja Venkatraman, who is the co-founder of NeoTrader, joining in. Raja, great to have you on the show. We have been consistently witnessing record highs on the index level, and the mid-cap index as well had hit a fresh high recently. But we do see that fatigue and some bit of consolidation kick in every day. When the Nifty hits a fresh high. Do you think that trend will continue today, or do you think it will just be a day of consolidation and Nifty Bank will be the one to watch out for today, given the fact that it's not very far away from its all-time high?
Yeah, good morning, Nandita. Thank you for inviting me to the show. The way we have been seeing and tracking the indices, we definitely feel that the way up has been a grinding upward bias. While the bias continues to remain, it is also now injected with a lot of fear because every month we have been witnessing some correction. And this correction has not been a small one, it's been a very sharp one and a large one. So this has unnerved a lot of people, and the kind of stock specific cues, even though they are coming in, they are only being appreciated by very few people. Rather, everyone is ready to short. So that has been the problem, and continuously every pullback which we are seeing have been witnessing some buying. So what it means is that the market is not willing to give up. So that is the broader message. But internally, everyone is still hurting. They are holding on to their positions, even though they are in loss. They are not willing to give up with the hope that the market will revive because everyone were waiting for the Fed rate cut. Well, they dictate the terms.
Hmm.
So now what has happened is that the expected rate cut has happened, and not 25, we have got 50. Now we got to see whether it's going to translate into some positive cues for the market. Now, looking at the way the market is getting set up, it definitely encourages us to believe that there is going to be some positive follow through. Well, the reaction will be delayed, so probably we could have some people carrying over their September position to there could be a good rollover as well, because I feel that the trend is going to emerge. Why I'm so positive about the bullish trend is that the bank Nifty, which was beleaguered, which we spoke about in the last session, that they were having some resistances around the 52,000 mark. Now, with that 52,000 level being exceeded, like you rightly said, bank Nifty is going to be the key index that is going to play, and if it and it will cross its former highs, I'm sure that the momentum is going to pull up. So the private banks have already started reacting on the positive side. Now, if the PSU banks also shows their weight, we will see that the bank Nifty is the one who is going to take us out of this somber mood, and I'm sure that we are going to have a much more positive October. So all is not lost. Positive vibes are still around. It's just that it's going to take some time. So on the lower side, if we're to go to the levels perspective, you can take a level of around 25,200 to 300 as an important support zone. And on the upside, 25,800 to 900 will be the target zone for the coming sessions till the end of the September expiry. And now in Bank Nifty, with the 52,000 level crossed, I expect a move towards 55,000. It may not happen soon, but then the momentum is very much there. And well, with the former highs being crossed, I'm sure that the momentum is going to take it towards 55,000, and it could be as soon as by the mid of October itself. So overall, this is the momentum on the downside in Bank Nifty. 52,000 will continue to be an important support.
Okay, 52,000 will be an important support, and 55,000 can't be ruled out in the coming, days or months, month rather, so to say. But let's focus in on the stock of the day first, Raja. IIFL Finance, this stock will be in focus, given the fact that, important development, a crucial development, the RBI has lifted a ban that it imposed on the company 6 months ago, and the ban was with respect to its gold loan business. Now, the company will or has been allowed to resume sanctioning disbursal and sell gold loans as well. In fact, RBI ban on gold loan business was due to material supervisory concerns, and the gold loan AUM had decreased from 26,000 crore rupees as on March to 12,162 crores as of August. So that had almost halved due to the RBI ban. But of course, now with the resumption of gold loans, that is expected to go up. So that's a big positive for the stock, right? So the stock is expected to see a fair bit of bump up in today's session. In fact, in pre-open, I was just looking at the rates; it was up somewhere around 10%. So, what is the kind of upside you expect on the basis of this news? And is it a good time to accumulate the stock?
Yeah, see, first of all, when it opens with on the back of the positive news, it's going to soon rise into a resistance zone. So now buying it from an intraday perspective, or if you have already bought it at the lower levels where it had dipped yesterday to a support zone around the 480 to 490 levels, was a good support zone. From there on, I am expecting a move towards 600. So if it were to hit 600, it's going to be a very strong resistance zone. So that's the range which I'm watching for. So unless if it's nearing that band, it will not be a right time to invest. Wait for a pullback. Now the pullback level after a gap up, you could track 530 levels as an important dip zone to buy into, because buying it at the gap up would not be a prudent decision.
Okay, that's the call on IIFL Finance. Of course, that's one stock to watch out for in today's session. The other one, of course, the Telecom pack will continue to remain in focus, given the fact that we saw knee-jerk reactions on both Vodafone Idea and Indus Towers yesterday post the Supreme Court's verdict on the AGR issue. We had brokerage notes also this morning wherein target prices on Vodafone are as low as 2.5 rupees, right? The stock has fallen below its FPO price of 11 rupees as well, under 11 rupees now. But in terms of support levels, what do you expect Idea, or how much do you expect Idea to fall? And with respect to Indus Towers as well, there was, a reaction on that stock as well, given the fact that Vodafone is a tenant. And although the impact will be a derivative one and not like a direct one on the company, that's what even some of the brokerages have maintained. But there have been target price cuts on Indus Tower as well, and there are concerns of derating as well of the stock going forward, because brokerages are saying that Vodafone Idea may have to take steps like continued tariff hikes to bridge the free cash flow gap as well. And Bharti, of course, stands to gain, given the fact that there will be market share gains for Bharti. It stands to benefit on that front from Vodafone. So, what's your view on the entire telecom pack? You have three players: Bharti, Jio, and Vodafone, and you have Hexacom and Indus Towers as well. What would you pick? And for Vodafone in particular, what is the support level?
Yeah, see, Vodafone, the kind of trajectory that has been going over the last entire year, yes, there have been ifs and buts, and now, ever since the last 3 months, the way down has been quite prominent. And with yesterday's decline, it has clearly indicated that it would be best to exit, because the kind of fall which we have seen yesterday is only indicative that any rally or a resumption rally would only attract more supplies. So it is a very strong supply zone. So I would not be a buyer, and I would look to be not averaging my position here. I would look to exit. Well, if the exit is going to hurt you, then wait for a rally, and the rally level would be somewhere in the region of 12 to 13, where I would look to exit my position, because overall setup clearly indicates that there is more pressure to the downside.
Okay, that's the view on the telecom pack, but we have the first ticks coming in on your screens. It's a triple digit up move on the index as of now. The Nifty is well above that 25,500 mark. Sensex also seeing a good 400 point kind of bump up. The mid-cap index right now is in the green. So the texture is fairly positive. The Nifty Bank index also 53,200 or so. Remember, the all-time high is 53,300 and above on the Bank Nifty. So possibility of the Nifty Bank index making a fresh high, but as of now it's above or around that 53,200 mark. Let's take a look at the sectors then, what some of the sectors are up to. As I mentioned, bank is trading with good traction. Autos are doing well, 0.4% kind of gains coming in there. Energy pack is buoyant. Metal pack, that's the top gainer, 1.5% up move on the metal pack. We also have a brokerage note on metals, wherein target prices have been revised higher on the likes of JSW Steel, JSPL, etc. So metals clearly shining bright in today's session. Aside that, even FMCG is doing well. IT pack has managed to stage some bit of a comeback after 2 days of weakness. So 0.5% higher for the IT pack. So yes, all in all the sectors are trading in the green. It's a strong start in tandem with what global cues are doing this morning. And in terms of individual movers, then let's see which stocks are taking the lead. Yes, metals as a pocket, as I mentioned, doing well. So JSW Steel, Tata Steel, these are some of the top gainers on the Nifty. We'll try and touch upon the brokerage note also that has come in this morning on the metal pack. So top three Nifty gainers are from the metal pack: JSW Steel, Tata Steel, and Hindalco. M&M, ONGC, Coal India, BPCL, these are some of the other gainers. HCL Tech has managed to edge back into the green this morning. HDFC Life is doing well. Bharti Airtel extends its gains from yesterday. NTPC and SBI Life are some of the other movers. In terms of gainers, the list is a little slim as of now. But let's see how once the day progresses what we end up doing. Tata Motors, Dr. Reddy's, Axis Bank, Ultratech Cement and Asian Paints. These are some of the 5-6 losers on the Nifty 50. But aside of that, things are doing well. But I just want to see what an IIFL Finance is doing in trade because of the relief on its gold loan business that has come in. 9.5% uptick on IIFL Finance as we speak. But as Raja said, not prudent to buy, the stock on a gap up. But Raja, looking at the market open,
Yeah.
I can see metal pack doing extremely well. Top three Nifty gainers from the metal pack: JSW Steel, Tata Steel, Hindalco. Any thoughts on any of these on an intraday basis?
From the way the metal pack is expected to rebound, so yes, there has been some rebound that has been seen, but then the rebound has not been very encouraging. So yes, there is a positive sign and a strong sign is we have to differentiate it now because the market itself is not very clear. So if one were to really participate in the metal pack, I would look to go with the Jindal Steel because I find that that stock has come out of its consolidation and the pullbacks are being bought into. So if one were to buy the metal pack, then one could look at Jindal Steel because the momentum is definitely on the positive side, and we can see levels of around 1100 in the next few days.
Okay, that's about metals. But I want to get in your thoughts on Reliance Infrastructure as well. Of course, the stock is in focus. It has gained quite a bit in the last few days on the back of resolution plan for its debt, and the board, of course, has approved raising up to 3,000 crore rupees via QIP. It's got the board approval to issue up to 12.5 crore shares of warrants at 240 rupees per share. But what or how would you approach stocks like Reliance Infra and Reliance Power now after the recent developments?
Yeah, so the kind of movement that we are seeing on the back of the news clearly indicates that there has been a news-driven uptick, and yes, its highs of April are being tested right now. So one can continue to hold on to the positive bias if one has already invested into, and if you were to invest it now, it would not be a appropriate moment because your dip levels are emerging at around 260 to 265. Overall, the trend is positive, and I expect that we can expect an upside towards 360 within the next 1 to 2 months.
Okay, those are the levels to watch out for on Reliance Infra. But Raja, before we move on to stock related queries, I want to know your trading picks that you have on your radar this morning.
Yeah, see, one of the trading picks which I would like to recommend is a buy in Wokhard because I feel that the stock is witnessing some steady upward traction. One could look to buy it at current levels or use dips towards say maybe 1000 as a dip level. Yes, the circuit levels are definitely hitting, but I would like to recommend not as an intraday play but as a multi-day play because I envisage a target of around 1200 in Wokhard because the stock is very positive. It has been doing quite well and it has been able to absorb all the negative vibes as well. And they have also got the recent drug approved. So all the positive triggers are keeping on coming in Wokhard. So that's the reason why I am recommending this stock even at this level. Overall momentum is positive, and one can look towards a target of 1200 because it's a good multi-day play. And the second stock which I would like to recommend is UBL because this stock also underwent a lot of consolidation and now it has come out of the consolidation zone. So I'm trying to select such stocks because those stocks are not having any baggage. And I see a target towards 2160 to 2170. as an intraday play, you can have a stop loss at 21.15 and continue to hold on to the stock as an intraday play. So these are the two recommendations which I will give on this show right now.
Okay, two stocks will be in focus today. One is Godfrey Phillips because the company will be considering bonus, issue, and Mankind Pharma as well. And Mankind Pharma is quite buoyant in trade right now because there is a board meet to consider fundraising proposal as well. So on these stocks, do you have any strategy?
See, Mankind Pharma has been a hit and miss. So I would not, advise somebody with a time frame of less than 3 months to hold on to the stock because the stock has got more pains. It has only recovered in the last month of August. Now, what we need to see is that whether this consolidation and whether it is able to hold on to the 2400 levels. So 2400 will be a stop loss, and the target will be at 3000. One can consider this because the setup has definitely improved. So one can look to have a target of 3000 and hold on to this stock as a multi-day play.
Okay, that's about Mankind. But let's shift focus to some of the queries that are trickling in this morning. The first one is coming in from Peter William. Wants to know your thoughts on whether or not it's a good time to accumulate Inox India with a long-term time horizon. Any thoughts on Inox India? Whether it's a good time?
No, it would not be a good time to accumulate Inox India because the stock is under pressure. Actually, it is a call to exit your position because the declines or the support levels are much lower, and it would not be a right time to even average the stock. So it's actually a call to exit, as per my opinion.
Okay, want to exit. That's the view on Inox India. But let's take up a query on GIC then. This one is coming in from Pooja Khanna. She has been holding on to the stock since it was at 398, and she can hold on for 6 more months. Is it a hold or exit? That's her query.
Yeah. So GIC RE you said, right?
That's correct.
Yeah. So GSCRE is moving along well, but now what has happened is that the entire insurance pack has gone into a sideways consolidation. So this will not be a right time to exit. One can hold on and await some more clarity before exiting. So if you want to exit, the exit level would be closer towards 360 levels.
Okay, that's the view. Hope that answers your query, Pooja. But the next query is coming in from Raja Pasala. Wants your thoughts on Samvardhana Motherson. He wants to know if he can enter at current level or wait for a dip, and he wants a view for the short term. What would you advise?
Yeah, a dip is advisable. The dip is ongoing now, and closer towards the 195 level would be an appropriate zone to enter. Having a target expectation of around 205 to 209.
Okay, those are the target levels. I hope you've taken note of them. But there is a query coming in on India Cement as well. This one's coming in from Shri Vardhan Gupta. He wants to know, a suitable entry point because he already holds 250 shares at the rate of 359. He wants to average it. At the current juncture, the stock is at 365. Would you advise averaging?
Not at the moment because the stock came out of the FNO, and right now it is just undergoing some consolidation. So it's better to wait and watch and then take a call later. So the dip levels are much further away. So if one should actually exit if it crosses 360 and then re-enter at lower levels, and the lower levels are quite down closer towards the 300 zone only.
Okay, that's the view then on India Cements. But the next query is coming in on data patterns. This one's coming in from Som Mendigar. Wants to know what to do with his holding. He has shares at the rate of 2252, and now of course the shares are, of course he's still in profit, but the stock has of course witnessed a fair bit of correction, stuck in a downtrend along with other PSU names. So how would you really approach this?
Yeah, the call now is to exit because the stock is under some pain, and the momentum is only accelerating to the downside. So it would not be advisable to hold on to this stock.
Okay, that's the view. Som, hope you have taken note of Raja's reply. But the other query that I want to shift focus on is Himadri Specialty. This one's coming in from Kartikeya Singh. Wants to know your thoughts on this stock. The stock is trading with a negative bias, but over the last 5 sessions, it has seen very good traction along with other chemical stocks, right? 10% up move in the last 5 sessions. Should today's dip be utilized in any manner?
Yeah, this stock is definitely on a very strong wicket, but the momentum seems to be nearing a point of exhaustion. So, in such an instance, it would be advisable to look at dips to buy into, and the dip levels would be closer towards the region of around 620 to 630. That will be a good zone to buy into this. But
Okay, that's the view then on Himadri Chemicals. But from chemicals, let's shift focus to the infrastructure space. I spurred a query on IRB Infra on the feed. Ravi Shankar has written in, wants to know your thoughts on IRB Infra for the long term. Within the infra pack, which stock do you think
yeah, good
warrants a buy?
morning.
Because IRB Infra charts aren't looking all that enthusing from a 1 month standpoint.
See, IRB Infra always is in a point of decline, and the stock has never really shown any kind of metal to the upside. So it's best that this stock is exited, and some other stock from some other sector can be considered, because that's the message which everyone should be taking at the market right now. While Nifty is a certain level, the stocks individually are not moving so in that fashion. So in such a case, it's always advisable to get into a sector that is moving, book some money, get out, go into the next sector. So that is going to be the way forward now, because the markets are not going to give us a linear run in the next few.
Hmm. Okay, there's a query that has come in from Alex. He wants to know your thoughts or your support and resistance levels for the mid cap index, because mid cap 100 index has, of course, seen a fair bit of pressure over the last 3 sessions. Right now, it's holding up, but as the day progresses, we have seen the texture of the market change after hitting fresh highs as well, right? So, in terms of support and resistance, how would you view the mid cap 100 index?
Yes, the mid cap 100 index, it has been moving very steadily. Like I mentioned, the indices are grinding itself to the top. So in such a scenario, it's always difficult to consider how this is going to relate to the market. But then now, what has happened in the mid cap space is that the profit booking, which we have seen recently, is affecting it. So the lower levels where the index has taken support yesterday at around 58,500, and the next set of supports is only emerging at around 57,200. So 58,500 and 57,200 are some supports here, and on the upside, door is open up till 63,000. So we have some room here. Now if this particular scenario is there is more clarity emerging based on the rate cut, and the necessary impact will begin to emerge, and we will see some more traction emerging. And now with the within the next month is the result season of the Q2, so that may trigger
Hmm.
some movement, and that's what will get the mid cap up and going.
Okay, that's the view on the mid cap index. Hope that answers your query. Couple of more queries to go, before we end the query segment. Uh, Abhijit has written in, wants to know what about a fresh buy into Bank of Baroda at current levels. PSU banks have been under pressure. The PSU banking index, keeps, ending the day in or with losses. Uh, so even Bank of Baroda charts aren't looking good, in the sense that in the last 1 month or so they have the chart has seen a 7% downtick. Uh, Even from a 6 month basis, it is in the negative zone. Would you advise looking at Bank of Baroda within the PSU banking pack, or would you say that look at the smaller ones, or for that matter, look at SBI instead?
Yeah, see, I would wait for some more clarity to emerge, because right now there is not much of clarity, yes, the one major clarity is that the bank Nifty has come out of the woods. But then I would like to see some more positive days emerging in a particular bank, especially the PSU bank, before I take a call on buying it. Because just because it is at lower levels, just because it is cheaper than what it was few days ago, few weeks ago, should not be the case of buying into. Because cheaper only becomes more cheap. That's the philosophy of the market. So I would not like to buy unless some positive tailwinds are emerging. And at the moment, I don't see any positive tailwinds apart from the rate cut. So that positive trigger is started giving some uh, you know vibes to the bank Nifty, but that has to now percolate into the respective stocks, and only then we will step into action. Otherwise, I would be a wait and watch.
Okay, wait and watch. Hope you've got your answer here on Bank of Baroda. But I just want to club two queries into one and get your thoughts in one answer itself. After that, we'll end the query segment. Ajoy Rajbanshi wants to know your thoughts on a Titagarh wagons. He holds it at 1398. He wants to know whether he should average at current levels or not. And secondly, there's a query coming in from Guru Prasad on ONGC, which has been under a fair bit of pressure and has been seeing brokerage downgrades as well. So these two stocks, if one has holdings, what should they do?
Yeah, the first one is Titagarh wagon, right? So Titagarh wagon,
That's
as
correct.
the rail stocks, the defense stocks, the theme which brought a lot of people out of the closet, has now began to lose its sheen. So it would be best to hold on to some of the stock. Actually, the situation is of partial let go. So you can book some of it, wait for a rally upwards towards 1440. If it is able to sustain 1440 and beyond, it's fine. Otherwise, the momentum is definitely to the downside. So one should not be holding their position beyond 1230. So 1230 is a final stop loss which I would place in this stock.
And the other one was
Pardon me,
ONGC,
can you?
Raja.
Yeah, the
ONGC.
oil and gas space. Yeah, oil and gas space has been disappointing. ONGC has come out with a lot of positive triggers, and ONGC, a lot of positive tailwinds were there, but then all those seems to have disappeared. And right now, the oil and gas space is under pressure. And ONGC, it's a very slow mover. So those who are going to invest into ONGC should have a time span of around 3 years for them to see any kind of return. The brief upside which you saw in ONGC in July is a rarity. So it is a very slow mover. So if you have patience, hold on, because it is at important supports. You can look to average it at current levels with a stop loss of the average position at 270 and look for a rise towards 320. So this is a plan which you can have for ONGC.
Okay, that's the view on ONGC, and that was the view on Titagarh as well. Hope that answers your queries. But with that, we've come to the end of the query segment. Raja, as always, thanks a lot for taking out time this Friday and joining in. And I hope to look forward. In fact, I look forward to interacting with you again next week. Have a great weekend.
Yeah, thank you. Bye.
Okay, then on that note, let me bring on board our other guest for today. Joining me, Siddarth Bhamre, who's the institutional research head at Asit Mehta Investment Intermediates. Sid, great to have you on the show. It's been a long time since I interacted with you last. A lot has happened since then. We've had markets hitting fresh highs, Nifty 25,000. We've had the rate cycle, taking a reversal. We saw Fed coming out with a 50 basis point rate cut, vis-a-vis expectations of 20, vis-a-vis, widespread expectation of 25 basis point. Your thoughts on where are we headed? Because, we've been consistently hitting fresh highs, but that euphoria, so to say, has been missing. Would you concur with that?
Good morning, Nandita. It's wonderful to be back on your show. Thank you for inviting me again. Yes, a lot of that happened in last couple of months. To start with, Fed's action. Uh, See, a lot of people feel that now, if Fed is not worried too much about inflation and worried about job, then people are expecting that there is probably a big problem in US economy. But then whatever we heard and made out of what Fed mentioned, they're not worried about US economy. They're saying that the US economy is on solid footing, and that's the exact word which he used. He also mentioned that job data where people this time are participating more in job market. So an unemployment data with such high participation at 4.2% is not alarming. Yes, people have been used to 3.3, 3.5% kind of number as a lower number. So generally, people feel that if inflation problem is solved, then the growth problem would emerge or employment problem would emerge. So it's not like it's not like an pendulum where from one end of the problem you go to the other end. Fed has taken its own sweet time, as Fed chairman also mentioned, and that's the reason I believe you haven't seen any huge surprises. Market was expecting this 50 basis cut, and after that, unlikely, Nandita, we have seen that when interest rate starts correcting, even markets correcting, at least statistically, but this time we are seeing markets moving higher. In fact, bond yields, US 10-year bond yield also didn't correct because it has been in the price. So overall, I believe this market is here to stay. And if you look at the kind of liquidity which is gushing in, Nandita, we both were there in this market around 2006, 2007, and I'm not talking about the Indian stock markets. Chinese stock market used to trade at, and China being a manufacturing country, Chinese stock market used to trade around 40 times price to earnings, and people used to justify because the kind of growth rate is to be there. And that time also liquidity was very strong. India is not a manufacturing market; it is predominantly a service-oriented market, and we are not trading it as high as 40 multiples. We are still around this 26 to 28 band. We are not attractive, but we are not super expensive. And in this world, when growth is hard to come by anywhere, India is an oasis, and funds both domestic as well as from international arena would flow into our markets. So people who purely follow value investing, they will have tough time in our markets as they continue to see stock markets and individual names moving higher. So I think one should not be negative. Yes, be cautiously optimistic, but don't be out of this market.
Okay, don't be out of this market. Of course, it has been a good run, and staying out, of course, will mean missed opportunities. But let's focus in on one sector, that has started to fire up. In fact, that has fired up after a long time of underperformance, right? It's the banking sector, very close to record levels. But within the banking space, there is a division, right? We've had brokerages come out with notes where they have, voiced their caution when it comes to PSU banks. And they've actually said that stick to quality private banks. But once the rate cycle turns, do you think private bank margins will come under further pressure? Because there's already this intense fight for deposits, right? So private banks are also grappling with their own set of issues. But valuation wise, would you also advise sticking to private names now? And the fact that PSU banks have already had a good run, does it mean that here on they will see more weakness?
Right. So, Nandita, I keep discussing this with my team that generally people talk about shifting from PSU to private or private to PSU. It's like, shifting your water from a small glass to a huge bucket of water. You can't shift because the quantum is so different, and your private sector bank is like a huge bucket of water, and PSU, you have only, one formidable option, which is SBI. So shifting is not something which I am big fan of between PSU banks and private banks. Private banks is a sector in itself, and PSU is different altogether. Now, I've always passed one statement time and again for different sectors that either you will have a good story or you will have good valuation, and both of them don't exist together. Now, private banks, as you mentioned, that banks are struggling for fresh deposits, and that's the reason the credit to deposit ratio, which is around 76, 77%, and that is where actually it peaks, which is not a very good news for banking space, where credit offtake has also slowed from 16 to 18% to around 13 to 14%. And we are seeing that deposit growth rate is also not very significant. It's around 10 to 11%. It's not a good news. And that's the reason you are seeing that banking stocks, especially private sector banks, which generally used to trade at a higher price to adjusted book value, where we have seen HDFC Bank, ICICI Bank touching at price to adjusted of 4. are now trading much lower. ICICI Bank trading at 2.6 to 2.7. HDFC Bank is around 2.3. In fact, Axis Bank around 1.9, and with a decent growth is an attractive name in banking space. So one can have exposure in banking name, especially people who look for and value and growth combination. Banking space offers that. Market is slightly stretched, and that's the reason you're seeing that despite no fresh positive triggers, because liquidity is flowing, and how long you'll keep buying, those ITs and FMCG and autos of the world, which are slightly expensive now. So there comes, banking space, which is going through problem of its own, be it NIMS or be it garnering deposit, but the valuations are supportive, and hence one can invest in these names which we spoke.
Right. Let's shift focus to the auto space then. Now, this pocket has been the best performing on a YTD basis, right? But off late, at least the four-wheeler pack has seen some bit of a break, right? There has been a speed breaker, so to say. But the two-wheeler pack continues to do well. You had stocks like Bajaj Auto, Hero Moto recently hitting 52-week highs. The dynamics are also changing. You've had newer listings, right? Ola Electric being a case in point. So competition is intensifying in the two-wheeler premium bike segment as well. So how are you, how are you approaching the entire auto pack now?
Well, we continue to remain bullish in two-wheeler space because that is where we are seeing growth trickling in. In fact, just to give you an idea that four-wheeler is substantially, the sales numbers are substantially above pre-COVID level for four-wheelers. But two-wheelers has still not reached pre-COVID mark, which indicates that there is still growth possibilities. And looking at the kind of product innovation, premiumization, also entering into new segments, these names, be it Bajaj Auto, Hero, or from EV space, Ola Electric, which is flashing on the screen, these companies would keep adding a lot of numbers. So growth is clearly visible in two-wheeler space. Valuation, one can argue, we were very bullish on Bajaj Auto. We continue to remain bullish over there. Our target price of 11,200, 300 has been met. We haven't revised our target price upwards, but the story looks pretty strong for two-wheeler, Nandita. So if someone is not too perturbed by valuation because market is as such, then within auto space you need to be in two-wheelers. As far as four-wheeler is concerned, I think the high base effect is playing. Even if you look at the discounts which are going on in market, the higher inventory levels. In fact, the inventory level at dealers used to be around 50 days. It has now increased to 70 to 75 days, and that's the reason you name the company and it's offering you huge discount in market. So four-wheeler space or PV space, we are not negative, but I think it would remain under pressure for some time.
Okay, that's the view then. But before I let you go, Sid, any other sectors or stocks which are catching your attention, which you fancy now at these levels? Because valuations, as you mentioned, India isn't a very expensive market, but it isn't cheap either. And at these levels, anything that offers valuation comfort?
Well, there are very few names left, Nandita, where you'll see valuation comfort. But I'll touch upon some of the stocks which we recently came out a buy recommendation with. So we are talking about banking space, small cap stock over there, Karur Vysya Bank, based in predominantly in Tamil Nadu. That company is looking attractive from valuation perspective. Also, the kind of action which management is taking to digitalize its presence and concentrating more on MSME and SME space, also getting more into retail. That is one stock which your viewers can think of, getting into Karur Vysya Bank. In capital goods defense space, we recently came out with one stock called AI Engineering. It's not very cheap as such, but it has a monopoly business in India, a duopoly business across the world. It provides, this grinding balls for cement space, for mining space. It's also into mill lining, and the growth prospects from mining space is pretty high. That is one stock which you can look for. We recently studied high-tech pipes. Again, it's a mid-cap company. It's on a road for for its QIP, and the growth prospects, the capacity expansion which high-tech pipes is doing is commendable. It's pouring into solar power segment in terms of providing torque tubes, which would certainly increase its EBITDA per ton from current 3,600 probably to 4,000, 4,500. So that is also one stock which can attract investors' attention from current levels.
All right, those are the stocks that Siddarth mentioned. Hope you've taken note of them. And Siddarth, I'm afraid we are running out of time. As always, it was a pleasure chatting with you, and I look forward to interacting with you more often on my show.
Sure. So thank you, Nandita.
Thank you, and have a great weekend. Well, on that note, then just take a look at what the markets are doing. Cooled off from opening highs, but nevertheless, we are trading with gains of somewhere around 50 points on the index. So the Nifty is holding up above that 25,450 mark. Midcaps also showing good traction as of now, 0.5% uptick there. And the Nifty Bank Index, although has given up some of its opening gains, but it is still in the green and above that 53,000 mark. So good Friday turning out for the market still now. Let's see how the texture really pans out as we progress through the day. But of course, we've come to the end of this edition of Opening Bell. Thanks a lot for tuning in. See you at 3:30 p.m. with closing bell. Don't forget to tune in. But till then, have a great trading day and stay tuned to Money Control for all your other news and updates.